Okay, so let's talk a little bit about scalping SPY and triple Qs. You guys want to focus on the daily and the 4 hour chart. We want to look for demand zones and supply zones, which are similar to support and resistance. The only thing is when you're trading the market, it likes to soak in different areas. So you want to remember the market is a whole bunch of different stocks. It's a combination of all these stocks. So, how one stock respects support and resistance, the market has demand zones, which are similar to support and resistance, which one is the supply and the other one is area where there's some demand. You want to think about them as it takes more volume to fill in these areas. So, where at a stock, it might hit the support or resistance and bounce off or break through. On the market, it takes a little bit longer. So sometimes they'll trade around a demand zone for a little bit, soaking in buyers or sellers at that area before it actually makes the move or breaks through it. Whenever it usually does make a move, it breaks through it with strength. The reason you want to start on daily is because you want to find these zones, and this is how you want to set your levels. So on SPY, we had this red line right here, this little red box. Let me go. This is the current area right now that is actually rejecting. So if we were to look at it at a lower time frame, let's say the 4 hours, you're able to see it a little bit better. Let's go into something like the 30-minute. So now that we have this set, the way that you're actually going to scalp this is you want to jump in. You don't want to ever jump in firstly with full size. So you want to break your trades into either 2 or 3. So you might want to jump in with a quarter or maybe like 50% of your size. And at the moment since they've rejected this resistance level, right now is actually rejecting the middle of the channel. And this is the bottom of the channel, which has become the demand zone, where whenever it reaches this level, you see that it's bouncing. But it soaks up. This is 2 days, 3, 4 days, or right here that has been in this area soaking up before it actually bounces. The same way here. So when it hits levels, you know it'll respect and it'll test these levels for 1 or 2 days whenever you're trading the market. It's not just gonna break and not retest it the next day. The market always looks for confirmations. So the way that we would scout this is once you have your levels, you want to set your shorts until it breaks. So even now, it looks like it's gonna this week, maybe tomorrow, it might break right through here and go to resistance and break right through and go to the 400. If we get that good news from the FOMC, I'm actually on Wednesday. I'm sorry, but in order for that to happen, it needs a lot of volume. If it doesn't have volume until it shows you otherwise, short it at this level. That's why you go in at quarter or 50% first. Wait for confirmation to go in. Once it rejects, you can fully go in size and then trade it downwards. But at the moment, it is actually holding for right now. But if it comes anywhere to 396 and rejects, you jump in short. If it breaks right here, 396, you wait. If it turns green and the market inverse for the correlations are pointing downwards, then go ahead, you can play it long, especially if it starts to get into this resistance within the next few days, the 398s, and it sets up for the 400s. If by Wednesday this gets anywhere near the 400 levels and it actually we get good news, this is going to break up and this will become the new support level. It's been trying to break this for the last few days. If we get horrible news and it makes its way up right here, you have the short entry. Play this zone right here. This is a zone. You can set 50% and you can risk it over here to 399 to the 400 and wait for it to trend down. Within the next few days it will trend back down into support. Whenever the market moves, it never likes to stay in the middle. As you see, it doesn't like the freaking middle. It either wants to trade at the top or at the bottom, and it makes a move when it's trending. Trade it when it's trending. This is side to side. If you're going to do side to side and scalp it, only scalp it from the top or from the bottom. Do not scalp the middle ever. You will get burned. Scalp the top or the bottom, or only when it's trending. Trending will mean it went into a resistance and it broke, or it went into a support and it bounced. Only trending. The same thing for the triple Qs. The triple Qs is a little bit harder because lately it really just wants to move side to side. So if you were to see it, side to side action, but the same thing. You set your resistance level and the demand zone is at the bottom somewhere. So it's attempting to break upwards as well, but it's also going to take a lot of volume. So you want to scalp this the exact same way. Get into the 30s or the 15, and you see short all the top right here until it breaks. Once it breaks upwards, once it breaks this area right here, that's when you can officially go long for the long turns or for the long swings. Until then, you are shorting this market. It has to show you otherwise. It's going to take volume, a lot of volume to push this upwards, and a lot of good news. Until then, you know what your resistance areas are at. Short it from 283s. If it pops up, take a risk, 50% or going short. Once you get confirmation, you can go in size and come right back at the bottom. Until it breaks, do not go long. Wait for it. At the moment, triple Qs, for those who don't know how to trade the market yet, I stay off of it until that actually trends. Remember, trending is either going up completely because it bounced, or it's going down completely because it resistance. You only want to trade these or these. When it's sideways, do not, unless you're actually going to trade the top or just the bottom. I'll do NASDAQ and the S&P separately because they do trade differently from the SPY and the triple Qs. But remember, like I told you guys, whenever you're trading the ES and SPY together, if you have both charts next to each other, whenever the ES moves about 5 to 7 points, is when you're actually going to see the SPY drop about $1. For the triple Qs and the NASDAQ, it's about 10 to 20 points in the NASDAQ. When that moves, you're going to see this drop about $1. That's when the correlation is at its strongest. At the moment, like I said, it's gonna take a lot. If you ever want to look at the Dow Jones, the best one that you can ever look at when they correlate is gonna be the ES, the S&P, and the Dow Jones have the best correlation to each other. Whenever you see the Dow dropping a lot, if the ES isn't moving down, it gives you confirmation that the Dow's just taking a dip, meaning it's really going to reverse and keep bouncing up. Whenever the ES drops and the Dow Jones is also dropping, that's to let you know that the market is actually falling, and guarantee you the Nasdaq's also going to follow. Whenever you look at the Nasdaq versus the Dow Jones, they have decent correlations to one another, but it's not as strong as the Dow Jones. And the way that we can confirm this is because when we look at the correlation ES and Dow Jones, it has a 91% correlation. When you look at the NASDAQ, whenever is this? When you look at the correlation, it has an 82%. So obviously, when you look at the ES versus the Dow Jones, it has a better correlation with each other as opposed to the NASDAQ and the Dow Jones. That's just for anybody who wants to use that information. I'll give you another video later on the ES and the NASDAQ entries and how to scout that one as well.